Welcome. You're watching NDTV Profit. This is the Mutual Fund Show, and I'm Tamanna Inamdar. Now, we're witnessing a very interesting phenomenon right now in the mutual fund industry. And on this show today, we are going to put the spotlight on this. NFOs, or new fund offers, are not new, of course, but as the industry has been growing and as the average Indian investor has been trusting mutual funds more and more, we have seen a record number of NFOs being launched. We're seeing highest ever assets under management and a growing appeal for sectoral and thematic funds. But the question is, how much of it is going into NFOs? So let's put things into perspective. 58% of flows into sectoral or thematic funds were led by new fund offers or NFOs. In fact, of the 31 new active schemes added in 2024, this year, 23 of which were sectoral or thematic, most of them are new fund offers. Now, what is a new fund offer? A new fund offer is simply, as the name suggests, a new fund which is coming into place. I wouldn't equate it completely with an IPO of a listed stock, but it is a new manager, a new idea, a new theme that is coming into the market. As the demand for mutual fund investments increase, so has the supply of NFOs. So what are we talking about today? First of all, what are NFOs? Should you be looking at a specific fund because it's an NFO? Is it an advantage or a disadvantage to you as an investor? Is an NFO really the best choice? To talk more about this, I'm going to be joined by Devendra Singhal. He's Executive Vice President and Fund Manager of Kotak Mahindra AMC, which has recently come out with an NFO, so we'll get his perspective on this. I'm also speaking with Santosh Joseph, founder of Germinate Investor Services. He's a personal finance advisor, and we'd like to know his perspective on NFOs as well. So we're trying to get you all sides of the story and a very balanced view which will help you as an investor. All right, now having said that, let's begin with the conversation. And let me get Mr. Singhal's view first. Mr. Singhal, thank you so much for joining us on the Mutual Fund Show. Obviously, you have an NFO which is out right now. Tell us a bit about that. And also, what would be your response if I asked you the very basic and simple question? If I have to put in money, why should I put it in an NFO?
Thank you, Tamanna. Very good afternoon to you and all your viewers. NFO, as you rightly said, is a new fund offering. Now, whether one should be investing in an NFO or not, that all depends on what kind of NFO it is, what proposition or what theme the NFO brings to the table, and what is the expected returns one is looking forward to get over a long period of time therein. Now, when we talk about retail investors, when we talk about mutual fund distributors or asset aggregators, any thematic NFO adds to the flavor of the portfolio, and depending on the particular risk appetite of an investor, she can put some part of the money into that theme, and then if there's no other avenue being available for the investor to participate in that theme, then NFO becomes an obvious choice therein. So, but it is, it is not that NFOs are the best option to avail in the market. If you have a theme which you want to play and it's already in existence, then you can very well go there also.
Okay. So between an NFO and an existing scheme, would you say an existing scheme has a distinct advantage, Mr. Singhal? Just simply because there's a track record that investors can see?
I would say yes, to a certain extent, because the track record is already being established with the existing scheme. So investors know what they're getting into it. But many a times in conditions where the markets are pretty valued or richly valued, an NFO also gives you some timing impact therein for you to participate in the market, gradually deploying your money over the 30, 60-day period therein. You can do it yourself also in existing fund by staggering your investments over, let's say, a few months. But NFO gives you that opportunity straight away. And as I said, if the NFO brings a new theme which you want to be a part of, which you want your portfolio to have some exposure, then it becomes an obvious choice.
Okay. Okay. So all right. There is a choice that you have to make depending on what that NFO is also giving. So remember, it's always going to be specific. We're giving you broad-based advice over here, or our experts are giving you broad-based advice. Santosh, let me get you in on this topic, and let's first put into perspective why you think we're seeing such a huge number of NFOs first of all coming in, and why do you think that there's so much allocation going towards NFOs? And most of them, by the way, coming in the sectoral or thematic space.
I think generally flows to equity have been very positive and very robust. And, this is a trend that's continuing for quite a long time now. Whole of 2023 was a good year for equities. Even 2024 so far, we're in the middle of the year, the flows are robust. Now, you notice that this is a trend across equities in general, flows into mutual funds, and even SIP numbers. The last month number came at over 20,000 crore. So generally, we are seeing good, robust flows into equities. Now, within that, bulk of the new money, like you just explained earlier, is coming into thematic funds or the new fund offers that are in place, because these are new opportunities for investors to park their money. There is money to be parked, and then there is an opportunity which is new, or at least perceivably new, offered by a fund management company that they like, or a fund manager that they have a proven success with, and therefore there is a normal tendency to chase a good idea from a good fund house with a proven track record of the fund manager. And therefore, you notice that the flows into equity and the NFO flows are both coinciding right now to create a good atmosphere.
Okay, so that's fine, a good atmosphere, but for whom? Now let's come to the point, Santosh, when it comes to our viewers. Is this a good option for our investors? And should investors look at an NFO? Because remember, an NFO is also, and I mean nothing specific to any company, but NFO is also a big marketing campaign for a lot of AMCs. They want to push out a new product, right? So there will be a lot of attractive information about that scheme or that fund. How do you sift through and make sure that you're making the right choice?
Well, for starters, an NFO is actually not a new product in itself, because there would have been an existing product already available. But I think the focus and the kind of a microscopic attention that the fund gets at that particular point in time actually catches the investor attention. You are right, it's a marketing approach to launch a new category for a fund house which does not have that theme or that fund in their portfolio. Now, who is it good for? I think to begin with, the investors are spoiled for choice. There is so much of opportunity. There is so much of variation being offered by so many fund houses launching these funds, whether it's thematic, whether it's diversified equity. Now, I think the investor here has a clear and simple choice to make, whether they want to invest in a new NFO, whether the theme is new, whether the theme is attractive, whether they want to include that theme or that NFO into their portfolio. Now, there is no pressure by any of these people. The investor can choose to invest in existing funds and still make the most of the markets. The bottom line is, does the NFO fit your portfolio strategy? Make use of it if it fits the portfolio strategy. If not, there's always a comfortable fallback to tried and tested existing schemes.
Okay. Having said that, Mr. Singhal, we're also speaking to you at a time that your own new fund offer is on. Why don't you tell us a bit about that? What is this NFO and what is the proposition there?
So Tamanna, this NFO which we have is for BSE PSU index. It's an index fund, so it's a passive fund. In a market situation whereby we are all talking about valuations being rich, specifically on a mid and small cap side, even on the large cap side, we have one standard deviation above the long-term averages. The dividend yields of the portfolio are pretty low versus even to historic levels. This is one fund, this is one index, which is even now being available at reasonably attractive valuations of around 13 to 14 times trailing 12 months earning. If you look at the last 10 years of average dividend yield for this fund and for this index, it's around close to 3.5%. Even today, even at current levels of the market, it's around 2.7% odd. When you look at this index, it's a pretty well diversified index with around 37% in financial services, then around 20% in oil and gas, then power, and then capital goods therein. And then you have a whole series of sectors with the government has ownership therein. Sorry, I missed the most important part of it. the very starting point of this companies in this index is that the government's ownership directly or indirectly via companies is 51% or more. Okay. So as I said, it's a pretty diversified index of 56 companies, almost 9 to 10 sectors, with the top four sectors contributing around 85 to 90% of the market in terms of the market cap of this index. And as I said, financial services, oil and gas, power, capital goods. These are all sectors which are the backbone for any industries or any economy's financial growth and economic growth therein. So pretty good space to be in, reasonably attractive in terms of valuations, very high on dividend yield, and we have seen that there's a possibility of re-rating also happening in these names therein. That is why this PSU index won.
Okay, so that of course is the Kotak BSE PSU NFO, which is on right now, and again a thematic fund, again a passive fund, and in a space which has been very exciting recently. Let me just get a quick voice from you, Santosh, not on the specific fund because you know there's not much to say about it in terms of a track record so far, but on the fact that thematic and sectoral funds are in vogue right now, and those who want to ride on those themes from a longer term perspective, are passive funds a better option for them?
Well, first, let's just demystify the difference between sectoral and thematic. This is a big thematic story, which is the PSU category where the ownership is by the government. So therefore, this is that way not exactly a sectoral fund. This theme has multiple sectors in fact, in some of the most dominant sectors covered over there. Now, the second thing is that even though you could do well in another fund or maybe access the same PSU category through active or diversified, here you are for the first time having an access to an index created out of the ownership pattern, which also represents a very broad spectrum of many sectors which are integral to the part of the country. So therefore, whether you do it in the passive or active side, the exposure to PSU, if you believe in the PSU story, is an interesting bit to consider. Now, yes, some of these things are better managed in a passive strategy because you know the constituents and you know the names that are going to be there. The weightages will differ depending on whether you do it on active or passive. But the passive strategy makes a great case for investing in a strategy like this, which is more broad-based.
Santosh Joseph is with us for this part of the show. He's founder of Germinate Investor Services, and we'll now take queries that you're sending us in. If you want to send us your queries, the number's on your screen. All right, Mahendra has written in, he's age 34 and says, I want to save 1.5 lakh rupees in the next 3 years, and I want to save it through a gold fund. Which fund should I choose and how much should I invest per month? Interesting question there from Mahendra. Santosh, you know what struck me is that while everyone is, or a lot of people are obsessed about equity right now, Mahendra is looking at gold, which frankly has had a phenomenal run up as well.
So it's interesting that while we're all so fixated about equities and what segment to choose in equities, very silently gold and even the other lesser known commodity called silver, which has been available in the Indian market for over 2 years now, has eked out a very smart return at lower risk that they carry and has been a phenomenal value add to people's portfolios, both on the risk and the reward perspective. Now, coming to Mr. Mahindra, I think 1.5 lakh rupee gold could well easily be met, assuming that we even don't expect much return from gold, but just by the virtue of saving 4,000 or 5,000 rupees every month, you will easily accumulate a lakh and a half very comfortably by doing a monthly 5,000 rupee SIP. In fact, he'll beat that 1.5 lakh number and he may get to 1.8 lakh and with returns maybe even cross 2 lakh rupees. So I think, Mahindra, your decision to invest in gold is way better off when you invest in the paper form by investing in an ETF or ETF fund of fund. The advantage of an ETF fund of fund is it lets you, choose the amount of money that you want to invest, and not only an SIP, you can even top up whenever you want, as and when you get the money. You don't need to have a demat or a trading account for it. All the benefits are of the gold moving up is accrued into the ETF, gold ETF fund of fund. You have the Nippon, India Gold ETF, which is one of the oldest. You can go for it, or almost every AMC has got a gold ETF fund of fund. Practically no difference there, if not for the minor expense ratio difference.
Okay. So that's the advice for Mahindra. Kanchan also writes in, who's 28, says when investing, is it best to remain invested in only one or two fund houses, or should I diversify further? Now, this is an interesting question as well from Kanchan. Because, you know, Santosh, we talk about not having too many funds, but here the question is about fund houses. Does it matter that you are with just one or two fund houses?
It's a good question, and Tamanna, I think it matters. I'll tell you why. Because though the strategy of the scheme may vary, and we always suggest not to do too many schemes, because diversification should not become diversifying your portfolio, which is you make your portfolio worse. But I think being prudent in how you select the mutual fund company also has got a bearing on your portfolio, because most of the mutual fund houses have a style of operation. In fact, whether you can call it a bias or a factor methodology they use, or even from a valuation perspective that they use, it does make a difference to add that extra one or two fund houses into the portfolio, even if the category of investment is the same. Let's assume you take the vanilla multi-cap or a flexi-cap strategy. Within the vanilla or a flexi-cap strategy, you'll notice that all schemes are not the same. Their exposure to large and mid-cap, their exposure to growth versus value, their exposure to certain sectors differ. So therefore, when you choose maybe two or three, or maybe even you could go up to four fund houses, you get the best of the strategies that the fund house themselves employ at a macro level.
Okay, let's quickly take more queries before we can move ahead. Next one is from Rityunjay, who's 45, says, are applications such as apps basically, such as Grow, Ind Money and Upstocks, reliable for long-term mutual fund investors? I have an account with ICICI Direct. Which app or medium should I use? I found this a very, you know, interesting and practical question as well, Santosh, because is there any real difference? Sometimes a lot of apps which are not directly related to a bank or a financial institution by itself get a lot of flack online. Is there a difference? Should anyone look at what that app is or what the method is?
Well, to begin with, I think the regulatory process for all these apps are quite good and stringent, and we have to be happy about it, that whether you're bank sponsored or a financial institution sponsored, or some of these new age tech apps which are actually private equity sponsored. Now, all of them are under the same regulation, under the same regulator, and they are well monitored and controlled. So therefore, I think we should not worry about whether one is trustworthy compared to another. The most important question is, do you like their interface? Is it comfortable for you? Is this what you want? And does it help you manage your investments, whether long term or short term, well? Now, for the people who have a bank sponsored or a bank funded account, sometimes they say it's because of the convenience of the banking activity that they are sticking with a bank sponsored company. Now, for the other guys, they are just happy with the interface. Maybe they're happy with the app. Primarily, I don't think there's a worry about who should deal with or who should not deal with, because I think they're all well regulated. End of the day, it's your choice. Now, you also may do better for yourself by, being a little more safer over there by choosing one against another, where you feel that, the organization is well capitalized, the team and the processes are good and well documented. I think it boils down to the management and the processes that these companies follow. If the processes and the management is good and they're well capitalized, I think you should not have a worry about which brand you're dealing with.
Okay, very quickly we'll take one question from Kamal Shah, age 35, says, what are some of the best pharma funds to invest in? Is looking for an allocation of 5,000 rupees per month. So this is, I thought, unique, Santosh, because everyone's right now looking for defense funds, PSU funds. Not very often you see someone looking for a pharma fund.
It's always interesting when people, pick up the fund which is not done well last 1 or 2 years, and they ask you a query, because then someone is thinking about it. When we look at PSUs right now, which we spoke earlier in the show, if they were picked up 2 years ago, you got handsomely rewarded. And I think today, at some parts, IT and pharma is looking at that part. And my answer to this question is that, there are tried and tested many pharma funds. In fact, there's a larger theme called the healthcare and the pharma category. There are many funds in the space. I think if you go back in time, if you look at it, almost all the big fund houses, whether it's a Nippon or a SBI or a ICICI, all of them have a good pharma fund. You can start with one of them straight away. And I think it's nice that you're considering pharma in this part where I think you have some time to go before they turn around and start delivering value. It's the right time to start looking at them.
Okay, so this is the right time to look at some of those pharma funds. Any specific names that you can suggest, Santosh?
I was saying whether it's Nippon or ICICI or SBI, all of them have a good fund. And considering that you're doing an SIP in a beaten down sector, great shot at it.
So no one specific or two specific funds that you will recommend?
I think just one is enough. Maybe if you just go with the Nippon, they got a long track record and they're done well.
Okay. Okay, so yeah, my job is to get the best possible answer for our viewers. So the Nippon Pharma Fund is the one which Santosh likes the best. All right, that's all the time we have. Thank you so much, Santosh, for joining us today on the show. Numbers on your screen whenever you want to message us or put in your queries, and we'll be there for you. But that's all the time right now on the Mutual Fund Show. Stay tuned, a lot more coming up on the other side.